the last panel will be here. I think it's a very important one because it's about SMEs, small and medium enterprises, which is the core of the economy in Turkey as well, and also in the European economies as well. So our moderator will be Nariman Zhakinbayev. He's the executive board member of Şekerbank. May I have you on the stage, please? And he will be accompanied by Mr. Michel, Kilzi, founder and CEO of UBIQ. You're welcome. You're welcome, sir. And also you'll have Koray. Koray is the executive vice president of Kredi, Kayıt, Bürosu in Turkey. Koray Bey, buyurun. And also another Koray, Koray Gültekin, Bahar. May I have you on the stage, please? CEO of Fit Solutions. And last person is the Fadi Saab. Hoş geldiniz. The chairman of Trans Capital Finance Senior Advisor of World SME Forum. Welcome. So I'll be watching you very carefully. Thank you.
Thank you very much. So, first of all, I would like to thank for organizing such a wonderful event and inviting us here to discuss a very important topic, which is the SME business. I guess there is no doubt that it is a very important for every country, especially in Turkey, because around 99% of the working businesses in Turkey is the SMEs, and they they employ more than 70% of the people in Turkey, and their share in export is around 55%, and in import around 30%. And that's why, if you ask probably most of the banks, they will tell you that they are either already focusing on the SME business or will start focusing in the very near future. And as all the aspects of the business we have, the technologies are affecting the SME side as well. So today we'll talk about how exactly the technologies are affecting that business, what are the news, how it has changed in the last several years. And let's start with a general question: why SMEs are important for the world, let's say.
Thank you, Nariman. I think you mentioned it, not only in Turkey, in all developed and underdeveloping developing countries, SMEs are the backbone of the economy and economic development. But what's an SME? An SME can be defined as a company with 20 employees and 10 million euros, or a company with 200 employees and 50 million euros. And the states can go all the way up to 250 or 500 employees and 50 million euros and above. So the definition of an SME varies, and therefore the requirements of an SME varies. What the B20 did, the B20 being the business community of the G20 countries, is have a platform for the business environment to talk to the leaders of the 20 greatest economies about the requirements of the business sector. And as you know, the presidency of the B20 and the G20 differs every year. It changes. Turkey was president in 2015. This year it's Germany. They have decided to concentrate on the resilience of the business sector, sustainability of the business sector, and accountability. Accountability being, responsible business conduct. And through the activities of the B20, we have thematic committees that talk about trade, infrastructure, climate, health, digitalization, and we have cross-thematic committees that talk about anti-corruption and proper business conduct and SME. Hence, the importance of SMEs comes again one more time in that they need specific attention to develop and prosper and become large companies. Being in a fintech conference, I'd like to mention that we have seen technology grow exponentially over the past few years. And I think we're on the tip of the iceberg. So if we look at that, so we're going to definitely see a major growth in technology and fintech over the next few years. It's going to be exponential at a very high growth rate. As far as SMEs are concerned, the technology in fintech has been more geared to consumers and consumers, and as being the main users of this technology. And we have seen, on the other hand, startups and small companies as being the engine for innovation and for bringing in this technology into the marketplace. We will see that soon the shift is going to also include SMEs as a major user and as a major provider of fintech, because it's not only from startups dealing with banks or with major large companies. We were going to see a lot of B2B interaction on the SME level, where we would have SMEs who are main creators of this technology and main providers, main players in the ecosystem, and we will see specialized products that are geared to SMEs in moving forward. So this is going to be an interesting world that we're moving towards, and we're only seeing the beginning of this, and I think Turkey can play a major role in being an SME and technological and therefore fintech hub in this region.
Thank you. Obviously, we do understand the importance of the SMEs, and all the, as I mentioned, all the banks are talking about SME finance, different types of products they're trying to provide to SMEs. But despite that fact, only 33% of the loans are used by SMEs in Turkey. And in that sense, I would say that other sources for financing are also important, which is, for example, a supply chain finance. Sure. So my question is to Michel, and how do you see supply chain finance maybe not replacing the banks, but taking more active role in SME finance, and what's happening in that particular area? Let's say.
First, supply chain finance won't ever replace banking, so don't worry. Okay. You know, in a commercial transaction, once a buyer is buying from a supplier, there's a commercial trading transaction going on. Mm-hmm. And basically, there's two dimensions, the price and the payment terms. Definitely the product, the quality of the product, the specification of the product. But at the end of the day, the big fight is on the price and the payment terms. And here comes a conflicting, or what I call a zero-sum game, where the buyer wants to push away to the maximum the payment terms, while the supplier, his counterpart, is trying to push the reverse way to cash in the earliest possible. Mm. So supply chain finance solve this dilemma, solve this conflicting trading transaction. So it ensures to the buyer that his payment terms will be deferred, will be extended, while giving the option to the supplier to cash in the earliest possible. Mm-hmm. So through a true sale transaction, and true sale means that there's an approved invoice and there's a legal framework around it. The invoice is kind of, becomes kind of a collateral. It becomes kind of an asset. So it's a payment obligation from the buyer committing to pay at maturity date, at the new maturity date, at the extended maturity date, the net face value of the invoice. So then comes in the banks, the FIs, okay, to fund the transaction, mm-hmm. Leveraging the credit rating of the anchor buyer. So usually a supply chain finance is a buyers-led program, and that buyer is a large corporation with a good credit rating. And the 70% of the suppliers are SMEs. And I mean, this is a benchmark. It's a global, worldwide benchmark that 70% are SMEs and 30% are companies that are either domestic or international, but that are larger in size compared to the buyer. So on the SME side, those suppliers are going to benefit from the rate arbitrage between the yield being applicable on the buyer versus what they can aim for. So in that transaction, a supplier is going through a totally off-balance sheet transaction. So the supplier is not being lended, okay? He's not contracting a loan. He's not using his balance sheet, okay? It's the buyer, okay, who's leveraging his power, okay? So the real benefits is that the supplier that used to deal with that specific buyer at, let's say, 90 days, today on paper, the 90 days becomes 120 days, but the suppliers can cash in at day 5. Okay. So just the few days that are needed for the buyer to stamp, to accept, to endorse the invoice, and immediately the supplier is being paid. So from the supplier side, it's a beautiful transaction. They're getting their cash at day 2, day 3, day 4, day 5, whatever. It's totally off balance sheet, and it's at a very good rate because it's the rate of the anchor buyer. Mm-hmm. The buyer has benefited from a free of charge extended payment terms. So the buyer is getting 30 days extra or 45 days extra at zero cost. Mm-hmm. Why? Because the supplier has bared the cost of the discount rate of the invoice. So usually when you contract a loan, at the end of the day, you have to return the loan and the cost of the loan. Yeah. In that case, the cost of the loan went on the side of the supplier. So from the buyer's side, it's all about working capital optimization. Mm-hmm. So by extending the payment terms, they're freeing cash trapped into their balance sheet. They're boosting their cash flow. From a bank's perspective, so there are 3 stakeholders, the buyers, the suppliers, and the banks. The banks love it because through one anchor buyer, they're accessing thousands or hundreds of SMEs, leveraging the risk of a powerful organization, a powerful corporation, and it's kind of a free cost of acquisition for all of those SMEs. Supply chain finance has also some, let's say, macro level dimensions, whereas today the highest failure rate of bankrupt SMEs is, on a global scale, is about delayed payments. So the number one reason why SMEs fails in the world is because they get paid late. And the big boys, the big powers of the world, they benefit from the weakness of the SME to delay payments. So by having this factored into the ecosystem, in a way you're protecting the SMEs and you're contributing to the cash conversion cycle into the economy, contributing to the GDP. So if we take example of what happened in UK, when Prime Minister David Cameron launched the supply chain finance as a government, as a British government, it affected 110,000 British SMEs. Not only he ringed the fence around them and he protected them, but 3 years later, 18% of those SMEs were offering new jobs. So it's not only about direct GDP impact, but it's also on the long-term employment and global improvement.
Sure, sure. So then if you would like to finance an SME, you would have to properly understand the business behind it. This is where the scoring comes in. And let's hear about the scoring from you, Koray.
Well, the bureau scores actually go beyond up to 2004 in Turkey. I'm talking about the credit bureau scores, but that's for the consumer side. When we come to the SME side, scores actually made available much later than that, just because of the approach of the banks. If you look at the banks, credit departments, the approach to underwriting is totally different. For example, as a person, you can go to bank and ask for a 15,000 lira loan by SMS, sending just a simple SMS. But if you ask for a 50,000 loan in commercial, you have to go through a lot of detailed investigation, balance sheets, income statements, all sorts of things. So the mindset in the banks should change when we come to the SMEs. I see in the recent years this has become, started to become changing. When you look at the banks' SME portfolios, as you said, I think 32% of the loans of the banks are actually SME loans.
Yeah.
But if you look at the number of transactions, credit underwriting processes, it's vice versa, maybe even more. 80% of the credit applications come from SMEs and go through this detailed SME credit policy check.
It takes time.
It takes a lot of time. This causes inefficiency. And also, a client at that size, when it comes to a credit to the bank, should get the same decision from each channel. It should not change from branch to branch or from internet branch to real branch. So credit scoring gives us the opportunity to actually localize this credit decision. Although it is localized, but the decision is made centralized. You can give some authority for overwriting to the branch people if you need to. But in general, regardless of where I'm applying, I should be able to get the same credit decision in the bank. On top of that, centralization gives you control over your credit policies. When you have a credit scoring system, you can actually mathematically calculate the amount of risk you want to overtake. If you want to get 2% bad credit, you can come up with 2% bad credit with calculation. If you want to work with 3%, you can approve more and come to 3%. It's like an income and loss balance. It depends on your balance sheet. In credit scoring, score is just a value, 100 or 1,000. What matters, what you will do with this value as a credit policy. So these things actually changing in the banks. SME credits getting more similar to consumer credits in terms of underwriting policies. Especially the credit limit renewals are a big burden to the banks in SMEs because of the number of applications. Every year, since these are continuous credit lines, you have to renew this credit line, go through the same process again, collect detailed paperwork from the clients. That's a burden to them also. As they started to change, the providing of SME credits by the banks to this segment will increase in the future.
And what sort of information do you require from the SMEs to provide the scoring services for them?
We do not require any information from the businesses. We collect this information directly from the banks as the credit bureau. Our rating system is totally based on their past credit performance. Number of credits, accounts opened, closed, limit utilization ratios, payment behavior kind of thing. And when we look at the final score distribution and the bad rates corresponding to each score distribution, what we see that just by looking at the score, you can make at least 80% of your credit decisions automatically, with eliminating at least 15 to 20% of your bad accounts totally automatically.
Okay. Then, I mean, SMEs are more, let's say, small enterprises. 96% of the SMEs are less than 10 million TL in balance sheet. And they will need proper accounting, they will need proper reporting in order for you to make and for us to make our credit scoring to see what's going on in business. So, Koray Bey, maybe you can explain us how your company is helping to SMEs in this regard.
For sure. Actually, let me start giving with some numbers.
Sure.
In Turkey, there are only 62,000 companies using electronic invoicing. And this number shows us, because of the obligation, these companies has roughly more than 10 million lira yearly revenue. Because the Turkey government says that if your revenue is more than 10 million lira, you oblige to use electronic invoice. Roughly 2,000 of them are using, because of some benefits they are not obliged to use, but they are like to use. For example, the parachute was here, so they have thousands of customers. They are really small companies. So 1 employee, 2 employee, maybe 1-2 invoice they're issuing every month, but they like to use electronic invoicing. And also, if we look at the cash flow issue, like Michel mentioned about that, in Turkey, the average age of the company is roughly 16 years. And 20% of every company who establish collapsing at the same year because of the cash flow problem in Turkey. And so it is making electronic invoicing really critical to use as a supplier financing, I believe, same as the Michel. What FIT is doing, we are providing electronic invoice services to our customers. We are working with roughly 4,000 customers, and roughly 700 of them are we deem as large enterprises. We are working more than 100 Fortune 500 customers. We are working with Apple, Unilever, Shell, so such a big guys. And also we are working with more than 3,000 SME customers we have. And 2 of them is a totally different segment, totally different requirements they have. And in Turkey, the software market is really diverse. There are more than 100 local accounting systems, more than 300 software populating invoice.
Difficult.
So it's really difficult to integrate all of them. But in the previous session, the bank's talking about the APIs. So in our business, it's also really critical. So you have to integrate with hundreds of different softwares. So because of that, you have to provide really open APIs to all your partners. So currently, we integrated more than 40 different local accounting software. And we are integrated well-known the accounting software, SAP, Oracle, Logo, Microsoft, and many others locally in Turkey.
And do you see the companies are really ready to open the insides of their business, their core systems? And I mean, this is a big issue for the banks as well, for the companies as well. I mean, how do you see it?
Actually, if we go back to 4 years ago, before electronic invoice obligation appeared in Turkey, everybody hates clouds. So it is, no one likes to put their finance information, invoice information, their books out of their on-premise server. But because of the cost efficiency, because of the easy-to-use solutions, they like to use. Let me give some numbers. In Turkey government electronic invoicing, you are able to use with 3 different alternatives. One of them is direct integration. So roughly 2,000 company is directly integrate their own accounting software with government platform. So every invoice, whatever they send or receive, directly go to the government platform and government distribute on behalf of them. More than 10,000 of them are using government-free web-based portal. So it's again a cloud portal. And more than 40,000 of them, 42,000 of them are using totally service providers. So the roughly 60% of the whole electronic invoice volume is provided and processed by the service providers. And in Turkey, there are roughly 13 million invoices every month in B2B, electronic invoice populating. Roughly 100 million invoice every month the company is sending to their customers, B2C electronic invoices. And volume also really high. More than 110, 120 billion Turkish lira every month electronic invoices are populating. And in B2C side, it is roughly 6-7 billion Turkish lira of electronic invoice are sending to the B2C companies. And because of these regulation, I think the enterprises are much like to use cloud service. And before that, I'm not able to say that, yeah, the companies like to use it.
So in 5 to 10 years, we all be living in the clouds?
I believe so, because in Turkey government, decreasing the threshold. So in the next 3 to 5 years, they would like to cover all the companies. They're going to oblige to use electronic solutions, digital solutions. So it is starting with invoice, it's starting with bookkeeping, now B2C invoice, electronic tickets. Now this year, government publishing electronic delivery notes. In Turkey, all the companies, if they're shipping any goods, delivery notes have to be printed with several copies, and it's become electronic. And the Ministry of Finance, they are announcing that more than 30 different documents going to be digital in the next coming years. So if you're talking about it, only Turkey ecosystem, more than 2 million businesses going to use tens of different documents in electronic.
Well, that brings a lot of advantages to that businesses. It makes it more open. It makes it also a competition rise. So maybe, Fadi, you could discuss how the new digital technologies are affecting SMEs, their business. How do you see it?
I think we should start by seeing what are the major obstacles in front of SMEs. Most SMEs have a problem with access to finance. Access to finance because they don't have enough internal capacity for equity. They get blocked by banks because the banks will not lend them if they don't have the asset base. And they have to resort to other means of alternative financial mechanism. The second major obstacle they have is access to markets, access to new markets, to new clients, improving their revenue-generating capacity. The third thing is access to innovation, access to information, access to an open, competitive environment, access to scalability, access to manpower and middle management. The common denominator of all of this is accessibility. So if you solve the problem of accessibility, then they can more easily find solutions to their specific problems. This is where the digitalized environment comes to play a major role for SMEs. And I think what Fintech is providing, and will be providing even more as we go forward, is the ability for those SMEs to operate from within the constraints of wherever they are, through a computer, through the technology that they have at their fingertips, to interact in the most efficient and the most competitive manner with suppliers, with financiers, with clients, with the whole ecosystem around them. And this is going to be a major leap forward for SMEs because then they can scale up. And if they don't scale up, they don't survive, let alone make the profits and grow into large companies. And this is what we're going to see more and more of, are platforms that are a bit similar to the platforms of, we know that the major success story is Alibaba, for instance, in the B2C world. In the B2B world, we're going to see more powerful platforms where SMEs are going to interact with other SMEs and with large companies on their various requirements. And just to give a little bit of an example from the startup world, we see what crowdfunding did for startups. The fact that they were able to exit digitally, to access digitally the financial world, many startups were able to fund themselves through crowdfunding. And we will be seeing more and more of these innovative methodologies that will help SMEs survive and move forward using digital environments.
Okay. Would you like to add something? I mean, the openness of the SMEs becoming more and more open, becoming more and more transparent, obviously brings benefit to them. They are in a position to use the advantages of the new technologies and also start selling products to their peers. And in that sense, will they be able to use your services as a credit bureau to understand who is their counterpart and how they're going to do this? Do you have such plans, maybe?
Yes. Of course, the only credit risk of SMEs are not the bank loans. Businesses open credits to businesses. This is actually as big as the bank loans in Turkey. They go through open accounts, promissory notes, or bank checks. Sometimes a letter of guarantees. But the major problem of the small businesses in Turkey is the cash flow. As Michel said, most of them go bankrupt because they cannot make their accounts receivable on time. Cash flow problem drives them bankruptcy. We know that resources are scarce, so we know them if one or two bad checks drive them to bankruptcy. In the credit bureau, starting from 2012 with the new changes in the law, we have established a new platform for businesses called Fintech. This same platform serves to the consumers also. Okay. Through this platform, you can become a member, a commercial member, and at the same time, you can ask for third-party credit reports or check reports. In a usual check report, when you accept a check from your buyer, you can check their previous check payment history. Okay. How many checks they have cashed, how many of them are paid on time, how many of them are paid late or never paid actually. What is the average amount of the checks you're paying, the maximum and the minimum amounts, so that you can make a quick decision whether or not this check is real, this check can be paid by this cashier, and you can accept this check or not. This is very important. The bad check ratio in Turkey is around 3.5%, and the average amount is roughly 20,000 Turkish lira. So in every 100 check you accept, most probably you will have 3.5 bad checks, which causes you 70,000 Turkish lira loss. Okay. And assume you accepted 100 checks and you made 2 million gross revenue. Yeah. With a 10% profit, your profit is 200,000. So you lost about 35% of it because of the bad checks. This is not supposed to happen for a business. Sure. So we are trying to train the businesses to make their credit decisions according to those credit reports. Everything is ready. They have the mobile application. They have the system in place. All the laws are permitting to see those credit reports. But what we are missing is the financial literacy. They don't know it. Yes. We need to advertise it. We need to tell them they are able to get those credit reports before taking the actual risk. But for some reason, we are not very successful in training them getting those credit reports, but it will take time. We're going to get there. The final thing we made for them is the square code checks. Yes. Taking a third-party credit report by law requires consent from that third party. But the checks in Turkey is kind of cash. It's like a promissory note. You can write a date on it, and
deferred
it's a deferred date. Yes, exactly.
Post-dated cash.
Post-dated checks, and the check owner can actually sign the behind of the check and give it to somebody else. And each check, you can never know it, but estimately goes 5 different companies in average. So, for example, Fadi gave Koray a check.
It will bounce.
Okay. In that case, you will not accept it. But let's assume it's not going to bounce. But you have a direct business with him, and Koray asked permission, your consent, to see your past payment history. Since you're doing business, you can give Koray to see this consent. But when Koray signs behind the check and gives me, I have to ask for your permission again, but there's no linkage between you and me. So what I need to do, I have to ask your permission, but you say who you are. I'm not going to give you my consent, and I can never see your credit history, but I still have to accept your check. To overcome this, we gone to the government and said, okay, let's create a different product which carries a pre-given consent on it, and whoever holds the check can get this check payment behavior automatically. And we put those square codes on the check and made an iPhone application, and also works on Android. When you get this check, you can read the square codes, and automatically the payment history with a check index score pops up on the screen, and you can make a quick decision whether to take this check or not.
It's also good for the banks, for the factoring companies, and for supply chain finance companies, and I mean, for the economy in general. I mean,
definitely
it makes it very fast.
Good. If your clients, as a bank, let's say you're a bank, if your credit clients know how to get risk, how to accept risk, in return, they will be a good credit client to the bank.
Sure.
So banks support the system, government supports the system. By law, all the checks carry the square code on them, starting from this year. But again, financial literacy comes to the place. When people or the companies accept the check, they have to make this quick investigation by just taking the picture and seeing the credit report.
And how many downloads of the application did you have?
Not as many as we want yet.
But it's growing, I believe.
It's growing, yes.
Growing.
It's growing.
Because it's very convenient.
Exactly. It's convenient, it's secure, it's safe. You can, in that application, you can even check whether the check is a real check or not.
Okay.
We go to the bank and ask to the bank, is this number valid?
Sure.
Is this informed as a lost or stolen check or not? Is another bank accepted this check already in their system? So it cannot.
So if it's already
has
been paid,
counterfeited check or not? Yeah. Already paid or not? Yes. So you can make all those checks behind the scenes. You never know it. But if you come up with a problem, system warns you.
Well, it sounds great. I mean, for the SMEs and what are the news in your part of the business in supply chain finance? Do you have any sort of innovation affecting your business, or do you have other things to share with us?
Sure. The innovation is about the ecosystem itself. So today the world is changing. What we're witnessing in the kind of the Uber or Airbnb businesses, where Uber doesn't own any asset, doesn't own any car, Airbnb is in the rental space and doesn't own any apartments. The shift is going towards flexibility, is going towards customer centricity, is going towards added value services. And post-2008 financial crisis, the companies are looking into optimization. They're looking into how can we do better with what we have already in place, and even push it the extra mile. How can we do better with less? So it's all about optimization. At the end of the day, Uber or Airbnb or Alibaba is about optimization.
Sure.
Each one in his own field, in its own channel, being B2C, B2B, what have you. So today we're seeing companies, corporation, industrial companies that are extremely liquid. They're very strong. So they can leverage their balance sheet. They can change the balance of power. In the old days, the banks were the most powerful kind of entities, imposing their conditions, imposing all their terms. The insurance company, in the old days, looking only into risk assessment and managing risk. Today, they're looking into trading risks. They're doing TCI, trade and credit insurance. The logistics companies such as DHL, they're managing inventory, they're financing inventory, they have access to the inventory. So all of this convergence is happening right now, and it's all about fintech. The fintech is all about creating a win-win-win, endless wins of stakeholders. So being crowd financing, being peer-to-peer lending, being what have you, insurtech, regutech, or all of those fintech, at the end they are upscaling the benefits to each stakeholders. And this is all about a successful, let's say, ecosystem. So today, when we look into the working capital optimization, we definitely look into receivable, payables, and inventory. On the payable side, we have covered the supply chain finance. On the receivable side, it's all about cashing in the earliest possible. And those companies are either selling domestically and maybe they're exporting. So they are exposed, okay, to clients being in Europe, in the Middle East, in Africa, where have you, and they're taking risks. So at the end of the day, it's how to manage my own risks and my own cash flow, me being company X, where your company is probably in a similar business, but you have different needs from my needs because of specific factors coming into different obligors, different country risk, different trading risks. So ensuring that flexibility to the corporations, being large companies or SME, this is all about fintech.
Sure. Well, we have lots of things happening, but I mean, we have to be also secured because some of the hackers and all the the guys want to make you cry, especially for the last several days, what we are seeing. How is the system is secure? I mean, in terms of you are uploading to the cloud everything that you have. It's all out there, and I mean, it's accessible. And how do you provide, I mean, security for the businesses? Because it's also important topic. Yeah.
Actually, the cloud is not top of the mountain, so it is already around us. So where the banks put their data center, it is almost a similar way, because most of the companies believe the banks are the most secure places, and we know most of the biggest troubles happened in the bank side. But I'm not saying that the cloud is a dangerous place or the banks are the dangerous place. The technology has always had some threats. And in cloud, especially in Turkey, and in the fintech side, the BDDK, the regulatory authority, has really significant standards and policies. And also from our business side, we are audited by the telecom authority because we have a CAP service provider. We are audited from the bank authority because we are the service provider of some banks. We are audited by the Turkey Revenue Administration and Ministry of Finance. So lots of auditors are coming and auditing you. And also, we have some investors, so because of that, we are doing some additional financial, the security policies you have to declare. And as I mentioned, we have more than 100 Fortune 500 customers, so all of them has their own global IT policies. And Apple says that in US we have these policies, you have to apply that, and somehow we have to apply that standards, and we have to cover that to provide a cloud service from Turkey to Apple. As FIT, I believe we are the second or the third service provider for Shell who's allowed to record and store their financial information in cloud. So all of them is a big step for us, and for all of them you have to spend and you have to invest the software, hardware, a good human capital, and with all of them you're able to be secure. And I believe nobody is 100% secured, but somehow we have to improve ourselves and our teams, our employees, our data center service providers to become as much as possible. Yeah.
Good. Well, we have some time for the Q&A session. I believe the topic is very interesting, and even though not everyone could make it until the very end, because this is, I believe, the last session. And we can take the questions if you have.
Hi. Is it okay? I'm Onur Barançağlar. So I want to ask you about, because you are all talking about the banking and banked people. So what you will do about the unbanked people? Because all the document and also the data is coming from the banks, the credit scoring and all the others. And especially for example, the Şekerbank also last researched about the women from the rural area with the anthropologist, why they are not coming to the bank branches, how we can touch them to open an account. So there are in other sectors like telecommunication and transportation. So these people, unbanked people, also touch there. So they have the behaviors anonymously, so their payments behaviors also already, so maybe we can get some used help from there, those sectors. because the SMEs, we are talking about SMEs, the most people and their customers are unbanked, not only the banked people.
Yeah, I take it.
Well, we as a bank, we are trying to reach out to our customers or potential customers by studying their behavior, as well as with the help of Credit Bureau and with the help of gathering other information from our customers. But in general, tapping the unbanked population or unbanked companies is a hot topic. And how do you actually reach them, or how you explain to the people the benefits of using the banking services, other services? That's the main question. Maybe you would like to?
Maybe from my side, not the B2C side part, but from the B2B side, we are helping to our customers through the behavioral scoring. So there are lots of SMEs who don't have any bank account or who don't have any bank credit scoring because they didn't take any credit from the bank. But they have a huge transaction between their suppliers and their customers. So through the electronic invoice, we are able to provide a behavioral scoring to their customers or to their suppliers to provide or extend their payment terms. So this is not a cash injection, but with the extending, as Michel mentioned, the extending with their payment terms, it's a huge capital for them. So if they're able to extend 30%, 40% their payment terms, so they're able to be a really good cash positive. So they're able to pay their suppliers invoice maybe sooner so they can get cheaper, or they're able to extend their customers' payment term to sell more and more, with the view of only the electronic invoice transaction, what their the business partners did through the electronic invoicing. And also maybe an additional, we just launched the Figopara, one of our joint venture company with logo last year, and this month we are doing the transaction to discount the company's electronic invoice directly in Turkey. And first two customers, one of them is one of the largest fashion e-commerce company. They plan to discount more than 20 million lira every month for their suppliers. And the other one is one of the car rental company. They have more than thousands of different suppliers, really small suppliers, these guys. Maybe some of them don't have any credit, but the 5,000 lira, 4,000 lira they are expecting to get from the car rental company. And through this platform, it's become applicable. And I believe these kind of solutions helps the SMEs to do much cash positive and to block their bankrupt issues.
Right.
Any? Are you satisfied with the answers? Do you have any?
SME's part is correct, because also it will be the base of blockchain. If you base this data on blockchain, ledgers,
For sure, yeah.
others can help. But I was meaning the B2C side, because the transportation and telecommunication has the data of these customers. B2C side, the SMEs need this unbanked as a customer, not only the SMEs.
So you're asking a consumer customer to a small business?
Yeah.
Okay, so how he...
40% of Turkey, nearly, the unbanked.
Okay.
These are big, huge customer base.
Okay.
Well, for an SME, it's not a very easy decision, because they have to reach some level of past performance data from some source. In Credit Bureau, we have the banking data only currently. Of course, there are other data sources that we can reach. For example, telco payments, for example, household payments, for example, other types of any transactional data. But there are some data protection issues around them, which we cannot directly share with the SMEs. But when it comes to the banks, of course, the level of data that they can use to make a credit decision is much more diverse. For example, this household data is available. The telco data will soon be available to those banks. Plus, banks collect information from their clients. Even though they are the first-time borrowers, they can still fill out an application form. And within that application form, there are demographic type scorecards that can calculate the risk indicators. And these are mostly limited amount of credits, not like huge credits, but micro credits with some collateral or guarantees behind it. But for an SME, the easiest way is to take a guarantee, which he knows can pay the amount if he doesn't pay, the borrower doesn't pay.
Well, you are absolutely right. Around 40% of the economy in Turkey is in shadow, let's say. So, but I think that it's a big task for all of us, including banks, government, fintech companies, to bring this part of the economy to the light. And as more efforts we spend there, as more convenient we make it to use it, I think, and more we will see businesses coming out of that gray area, and it will benefit to all of us, to all the economy. And I think we have a question, time for one last question, if anybody would like to ask.
Nariman, can I make a comment?
Sure.
It's a question that does not require an answer.
Okay.
One of the very important things that digitalization is going to make for SMEs is to help them fight corruption. Corruption is a major impediment to growth, as we know. World Bank estimates 10% of world GDP to be wasted in corruption. We're talking about more than $7 trillion that are wasted. And SMEs are the biggest victims to corruption because they are the weaker link. So they don't have the resources to compete with corrupt practices, if there are corrupt practices. Because they're the weaker link, they are therefore sometimes corruption practices are imposed on them and they have to accept them, otherwise they don't get the business. What Fintech specifically can do for them is by eliminating the middlemen, by enabling them to go directly to the source. This electronic system helps them fight corruption and therefore reduces their cost tremendously, and it gives them a level playing field with everybody else. So for an SME to be at the same level as a major corporation and be able to compete on the quality of its service or product and on the pricing of its service and product. This is a major impact that digitalization is moving and helping SMEs, and we will see more and more SMEs benefit from that because, as I said, they are very sensitive to corrupt practices.
Sure, and I believe that we will see probably the decreasing use of the cash money in the coming years. And thank you very much for this comment. Thank you very much for attending this panel, and we will probably wrap up with this comment. Thank you very much.
Thank you.
Thank you, gentlemen. Thank you. I think it's the last panel. So the day is being ended here. It's concluded here. So Fintech Istanbul 2017 is just being concluded here. Thank you, everyone, for joining us today, sharing your ideas, showing new worlds and a great divergence of ideas. Thank you, and have a warm welcome. Thank you. Cheers.